Good morning, dear learners. I, Dr. Vandana Sonkar, Assistant Professor, Faculty of Commerce, Banaras Hindu University, welcome you all to the next lecture of my course on financial literacy. This is module number 4, various types of loan offered by bank, and lecture number 17, short term, medium term and long term loan. In the previous lecture, we had discussed one specific category of loan, that is the personal loan, which is a category of unsecured loan that is advanced by the banking institution to the consumers. In today's lecture, we will be going to cover the various other types of loan that may come in the category of secured as well as unsecured loan that are offered by the bank to fulfill their personal as well as their business needs, and the categorization under this case depends on the time period for which the bank advanced the loan to their consumer. So, in this lecture we will be going to discuss the meaning of the term loan that is offered by the bank to their consumer, the different types of term loan that are categorized on the basis of time period, such as short term loan, its key type and features, medium term loan, its key types and features, and long term loan and its various types of categories that are offered by the banking institution to the consumer. So, let us discuss the various types of loan under the case of term loan. Basically, term loans are the loan that have to be repaid during a specified period over certain repayment schedule with a fixed rate or a floating interest rate that is charged by the banking institution from their consumer. In such cases, a borrower asked to advance loan from the banking institution with a lump sum of cash upfront for the purpose of exchanging it into different kind of needs for specific, with the help of various specific borrowing terms and conditions that are laid down by the RBI and the banking institution. So, term loans are basically used by the business household, the individual customers as well as other consumer in the market for the purpose of purchasing the fixed asset and other different kind of equipments, or for the purpose of acquiring any kind of household thing, as well as educational loan may also be categorized under the term loan category. So, basically the term loan is preferred by the consumer when they require more flexibility and they want to pay lower rate of interest to the banking institution. Since the repayment schedule is scattered over a longer period of time, a fixed or a floating rate of interest is charged by the consumer, and hence it makes it easier for the consumer to repay the installment and manage their finances well in case of the term loan. These loan may be categorized into short term, intermediate term loan, or as well as it may also be categorized in long term loan that may require balloon payments, while long term facilities come with the fixed payments for the purpose of repaying loan to the banking institution. So, basically term loan is a category of loan that can be defined as a loan which is required to be repaid over a fixed period of time, that is the term that may range from 6 months to 5 years to 10 years depending on the need of the consumer. The various key features of the term loan is primarily it is given to the consumer for the purpose of doing any kind of business or economic activities. So, it is offered to small business owners, entrepreneurs, business managers for financing different kind of business need, such as purchasing or acquiring any kind of equipment or asset from the market, or establish or incorporate their business activities. It may have fixed or variable interest rate. So, since it is given to the consumer for a longer period of time, and over the period of time the interest rate in the financial and economic sector may change. So, that is why it may have either a fixed or variable interest rate depending on the bank's policy and negotiation with the consumer. It also has a easy repayment system. That means it is a straightforward system where any complex formalities are not involved, and easy installments repayment schedules are made by the banking institution for the consumer for the purpose of repaying the loan to the banking institution. So these are the different key features of the term loan, with the help of which we can differentiate the term loan from the other categories of loan that is offered by the bank. Now, the various types of loan under the case of term loan may be categorized on the basis of duration, that means time period, and it may be categorized into three different categories: short term, medium term and long term loan. Let us have a detailed discussion of all these categories of loan. The first one is the short term loan. So, this kind of loan is provided by the bank to meet the day-to-day expenditure or to cover the short-term expenses or short-term financial goals of the consumer or the businessman. So this kind of loan may be very less risky for the banking institution, and it is generally of smaller amounts, making it more suitable for the consumer with lower income. So they will be very easily capable of repaying this kind of loan, since the total principal amount of the loan is very smaller, as well as EMIs will also be smaller. The short-term loan may have the following feature: higher rate of interest is charged by the consumer since the loan is advanced for a very short period of time, as well as it may be risky for the banking institution also. So higher rate of interest is charged from them. Shorter maturity period is there. A small loan amount is advanced to the consumer. Mostly this come into the unsecured category of loan. That means you need not to provide any collateral or any mortgage security for the purpose of having short-term loan from the consumer. The various categories or examples of the short-term loan are bank overdraft, credit card and personal loan that we take from the banking institutions. So the various types of short-term personal loan basically are defined as the very popular loan that is catered by the banking institution to the individual for meeting the personal need of the consumer. So short-term personal loan is basically a kind of personal loan which is taken by the consumer for a shorter duration of time from the bank. So it helps them to meet immediate financial requirement of their life, such as any kind of emergency medical expenses, home renovation, wedding expenditure or any other kind of personal expenditure that they need to fulfill. So you can take a small amount of loan such as 1 lakh or 2 lakh or 50,000 from the bank for fulfilling these kinds of financial expenses. The personal loan is not given for a specific purpose. That means you need not to tell the bank for what purpose you are taking the loan. The loan can be utilized by the customer for any purpose they choose. So they can either go for the home renovation, they can go on a vacation, they can reimburse the medical expenditure with the loan that they have taken from the bank. So multiple type of purpose of the consumer may be there for taking the short-term personal loan. It is basically an unsecured loan, so you need not to provide collateral for taking such loan. That means the consumer does not provide any kind of property proof or collateral to the banking institution for taking such loan from the bank. So in such cases, the interest rate is very high. For the purpose of taking the personal loan, you need to pay 10 to 24% of interest depending on the policies of the bank, and the duration of the personal loan typically varies from 6 months to 1 year to 5 years based on the borrower's need. Since it is a shorter duration loan, the interest rates are higher, as well as it is also based on the credit history of the consumer. If the credit history is good, it may be 10%. If the credit history of the consumer is not so much sound, then it may vary to a percentage of 24% in case of the interest loan that is charged on the short-term personal loan. The key features are: it is taken for a shorter period of time, no collateral securities are required, it can be used for meeting the short-term or immediate needs of one individual, such as for paying medical expenses, wedding cost, home renovation, educational fee or any other kind of purpose, and it is not given for any specific expenditure by the banking institution, such as you need not to mention that you are going to purchase a car and you are taking a loan under the category of vehicle loan. If you want to purchase a car, you can do with the short term personal loan, but you need not to tell it to the bank. So any kind of reasons may be given for taking the short term loan, and with the help of a specific purpose, you need not to ask for such kind of loan to be disbursed by the banking institution. Now let us discuss the next category of the short term loan. The next category of the short term loan is the overdraft facility. These facilities are given to the current account holders of the bank. That means the businessman, entrepreneur or any kind of managers who have opened any kind of current account with the bank and they are taking the facilities of banking under the current account head, they can have an overdraft facility from the bank. Basically, this is offered by the bank for the purpose of providing them the opportunity of withdrawing more money as compared to their actual account balance in the current account. That means if they do not have sufficient balances in their account, then also they can have the withdrawal of money for meeting their business expenditure or any kind of economic needs of their organization. So the customer pay interest on the overdrawn amount only, that is the overdraft amount, and the overdraft facility basically serves to them as an excellent source of short term financing. For example, if they want to purchase raw material for their business organization for production purpose and they do not have sufficient funds with them, they can take an overdraft facility of the bank and they can purchase the raw material from the market. Now the key features of the overdraft facility is there is a prior approved credit limit for every consumer that depends on the credit history, financial soundness and the overall financial record of the consumer with the bank. So it is extended to the customer on the basis of their financial relation with the consumer, and it may vary from one consumer to the another. It is offered to the current account holders only. That means if you have a saving bank account or a fixed deposit with the bank, you cannot ask for the overdraft facility. You need to have a current account with the bank for taking the overdraft facility. No EMI based repayments are required. That means you can pay the borrowed money from the bank anytime whenever you are having surplus funds with you. You do not have to repay the money via EMI. So however, the lenders demands a repayment. Whenever the bank demands the repayment, you'll have to meet the requirement. In otherwise cases, if the lender is not asking to repay your amount at a point of time, then whenever you are having surplus fund with you, you can go for the payment of the overdraft taken by you. Next one is the interest charges. Interest is levied only on the overdrawn money by the account holder. In case of the overdraft facilities, there is a predetermined rate that is calculated on a daily basis and billed monthly to the consumer for giving them an overdraft facility. So these are the various features of the overdraft facility. The next category of loan under the short term loan is the credit card loan. Credit card loan is a kind of facility which is provided to the credit card holders of the banking institution. So on opening the saving bank account and current bank account and having a particular kind of credit history and record with the bank may offer you to have credit cards, and it also is based on the credit worthiness of the consumer. So on the basis of this credit worthiness and good credit record of the consumer, the bank may grant a short term loan that can be used by the consumer for shopping, paying bills and paying other type of expenses with the help of credit card that is issued by the banking institution to the consumer. In such cases also, the credit limit is predetermined by the bank. That means the credit limit of 1 lakh, 5 lakh or more than 5 lakh will be predetermined by the bank depending on your financial records and credit worthiness, and the interest will be charged only on the outstanding balance that you need to pay to the banking institution for the purpose of taking the facility of credit card. So how you need to repay the credit card loan? Basically, a credit card loan can be repaid in monthly installments also. So the bank fixes a repayment schedule, and along with the principal amount of the loan, they charge certain percentage and add it to the EMI, and for a period of up to 36 months you can schedule your EMIs to repay the credit card loan to the banking institution. The key features of the credit card are: you need not to pay any kind of collateral security, that means it is an unsecured kind of loan. Quick disbursement is there. So with the help of credit card, only by entering your PIN into the device, or with the help of OTP if you are making the online payment, without any long procedure, you can take the loan with the help of credit card for purchasing any kind of equipment, paying bills or shopping or any other purpose. So without following any rigid and lengthy procedure, you can take the credit card facility. The predetermined credit limit will be there. That means if the bank has fixed a limit of 1 lakh of credit on your credit card, then that means you cannot exceed your loan amount from rupees 1 lakh. So fixed credit and interest is allowed on the credit card facility, and interest is charged on the balance amount that need to be paid by the consumer on the credit card facility. Now, the next category of the loan on the basis of duration has been discussed as the medium term loan, and as the name suggests, it lies between the short term loan and the long term loan. That means the duration or time period for a medium term loan will be longer than the short term loans, as well as it will be lesser than the long term loans that is advanced by the bank. So it is basically used to fulfill the medium term need of the consumer, that may range from a period of 2 years to up to 5 years. So these are commonly basically utilized by the business owner or the individual to finance various type of equipments, to purchase capital asset, equipment, technological advancement for the business organization by the entrepreneurs or the business owners. Now, the various specification or features of the medium term loan is: you can borrow a larger amount of money as compared to the short term loan. You will have more time to repay the loan amount as compared to the short term loan, as well as you may qualify or lower interest rate as compared to the short term loan. So in case of short term loan, since the loan was given for a very shorter period of time, higher interest was charged by the consumer, whereas in case of medium term loan, the interest rate may be lower as the period of the loan repayment is higher as compared with the short term loan. The various categories under the medium term loan may be discussed as the working capital loan and the asset based loan. The first category is the working capital loan. Working capital is basically a kind of capital that is required by the business organization or the business owner for the purpose of meeting their day-to-day business requirement. That means for the purpose of paying the different kind of organizational expenses such as fuel charges, electricity charges, as well as any other kind of expenses, wages of the laborers and salaries of the employees, you can take the working capital loan from the banking institution. So basically it is essential for the business owners to ensure the smooth operation of their day-to-day activities. If they are lacking the working capital in their organization, they can take this loan. So specifically it is given to the business owner or the organization for meeting their operational need. These are not intended for the purchase of large assets or investments. So the loan advanced under the working capital loan can be used for the purchase of raw material, but you cannot purchase a capital asset with the help of the working capital loan. The primary purpose of working capital loan is basically to bridge the gap between the timing of revenue inflows and the outflows that may be required by the bank organization for the purpose of covering the operational expenses of their organization. So by saying bridging the gap of timing of revenue inflow and outflow, we mean that whenever we invest our money into the raw material, we produce the product and sell it into the market, there will be a time gap between the production and gaining the sales revenue from the market. So for this particular time period, if you are lacking in finances because your fund is blocked into the whole procedure, then you can take the help of the working capital loan and you can meet your operational expenses in the business organization. The key features of the working capital loan is, it is basically a medium term loan. So the bank provided for the purpose of meeting financial expenditure for which you need to have a time period of 2 to 5 years for repaying the loan. So maturity date is comparatively longer as compared to the short term loan. It is given for the flexible use. Funds can be used for various purposes such as making payment to creditors, for purchasing the raw material, or paying the electricity bill, for payment of wages, for payment of fuel, and any other charges of the organization can be handled with the help of working capital loan. These kind of loans are also collateral free. So most of the working capital loans are basically given to the business owners without taking any kind of collateral security or mortgage from them. Next category of loan under the medium term loan is the asset based loan. And asset based loan is a medium term loan that is provided by the bank or financial institution that are mostly secured against the collateral. That means for taking asset based loan, you will have to provide any kind of property or security to the banking institution for the purpose of availing the loan. So it is basically offered to the business owner. It is not for the individual customers. For taking any kind of asset as an individual customer, you can take the consumer durable loan, whereas if you are a business owner and you want to purchase any equipment, any asset, you can take the asset based loan. Here you need to pledge any asset as collateral such as your inventory, land, building and other valuable asset of the organization as a security to the bank. The terms and condition under such category of loan may depend on the type and value of asset that is offered as a mortgage security by the consumer to the banking institution. So for example, if you are seeking a loan of rupees 2 lakh to expand the operations of your organization and pledge a highly liquid marketable security as a collateral, then the lender may grant a loan equivalent to 85% of the face value of the security. That means if you have given marketable security of 1 lakh rupees, then easily you can get a loan of 85,000 from the bank. And similarly, the ratio of loan may increase also on producing the higher value of the asset as collateral security. Now the key features of the asset based loan are, these are the loan that require collateral security. So you need to give any kind of property or asset as collateral. Higher loan amount is granted under such category. So 85% of the asset value is given as the loan amount to the bank. So if you provide an asset as collateral which is having a value of 10 lakh, you can get a loan of 8,50,000 from the bank. It is a customized loan. That means it is tailored to meet the specific needs of the borrower, allowing him the flexibility of using the amount into different kind of requirements of the organization. So this is the medium term loan. Now let us discuss the next category of loan which is defined on the basis of duration, that is the long term loan. And as the name suggests, long term loan is a kind of loan that is provided to the consumer for meeting the various types of long term requirements of their life as well as their business. So it is typically used by the borrowers to achieve their long term financial goal that may require a time period of may be more than 10 years also. So basically these kinds of loans are given for a time period of more than 10 years, or it may be 20 years also. So depending on this particular characteristic of the loan, basically this kind of loan falls under the category of secured loan. That means the borrower need to provide any kind of property, wealth, or any other kind of asset as a collateral security for the purpose of for taking the loan from the bank. So these loan comes with significantly longer repayment tenures that may range from 3 to 30 years, allowing the repayment over an extended period. And to be eligible under this particular category of loan, you must be a resident Indian and you must be a salaried or self-employed individual within a specific age group, that means 17 to 60 years of age, as may be determined by the lender. As well as some lender may also ask you to provide the guarantee from any guarantor to support your loan application. That means any financial guarantor may be required to sign your loan application for the purpose of taking long-term loan from the bank. So under the long-term loan category, we may have at first business loan. The business loan, as the name suggests, is required for the purpose of purchasing various types of assets, equipments, tools for the business purpose. So for the purpose of fueling the expansion and modernization of the business organization, business loan can be taken. So basically companies, enterprises, organization, they all can avail the long-term business loan from the bank for expanding and modernizing their business unit. So if you intend to set up your business or expand it, you can opt for the long-term business loan, and you may have a longer period of time for the repayment, that is the 5 year to 20 years also for the repayment scheduling. These loan may also be doubled as a long-term personal loan. So here you can pledge your business as a collateral security to the bank for the purpose of availing the loan from the banking institution. Then next comes the educational loan. We had also discussed this particular category of loan under the category of personal loan, since on the basis of duration, if we talk about, this also comes under the category of long term loan. We are discussing it here. So basically these are provided to the individual student for the purpose of attaining any kind of academic degree or professional qualification, and the repayment schedule here also is for a longer period of time. So this may also be an example of the long term loan. So by availing educational loan, the student may pay the fee, examination fee, library fee, hostel fee, admission fee, and their other educational expenses with the help of the educational loan. Now the next category is vehicle loan. Vehicle loan on the basis of duration also comes under the category of long term loan, because it is advanced to the consumer for a period of more than 3 to 5 years. So this is also a kind of loan that comes under the category of long term loan. So basically it is a type of loan provided by the bank to help the individual to purchase vehicle such as 4-wheeler or 2-wheeler, as we had discussed in the previous lecture also. And the last one is the housing loan. Housing loan is one of the very significant long term loan on the basis of time duration. If we can categorize it into the long term loan, this is given to the borrowers for a longer period of time who have a strong credit history, and they also provide their property as a collateral security to the banking institution. So for purchasing, for constructing, for any kind of other house building purpose, you can take the house loan from the bank, and with the help of housing loan, your payment of the whole amount of the acquisition will be easier and feasible with the support that you get from the banking institution. So these are the various categories that are covered under the different kind of loan that are categorized on the basis of time duration for which the loan is advanced by the banking institution to the consumer, that is for a shorter period of time, short term loan, for a medium term period of time, medium term loan, and for longer period of time, long term loan are advanced to the consumer. So depending on the needs of the consumer, they can choose any of the categories of the loan that they require for their financial needs. So with this we come to an end of this lecture. Thank you.